Hi everyone, welcome to this time Squaring Finance. Last week was pretty tough for everyone. Bond yields reached the new highest level this year on Monday, then tend to decrease since Tuesday. The reversing was sharp and hard, and a lot of bond investors fell down before the reversing. So does this mean that we have already got through the most difficult time? Did fundamentals start to turn to bonds market? And what should we do in recent? Well, let me tell you this time's story. In terms of fundamentals, economic data was released last week. In January and February 2025, industrial added value was 5.9% year-on-year, fixed asset investment was 4.1% year-on-year, and the total retail sales of consumer goods was 4% year-on-year. Except industrial added value was lower than previously 6.2%. The rest two data were better than previously 3.2% and 3.5%. The whole picture of economic data reflected that productivity forces kept struggling in the recession field and the investment had some signs of getting warm. The consumption was, as always, not getting any worse constantly, so the economy was on the way to the recovery with moderate speed. About the real estate data year-on-year, the warm side was even more clear. Completed investment in real estate development, floor space under construction, floor space of commercial buildings sold, floor space of buildings completed were minus 9.8%, minus 9.1%, minus 5.1%, and minus 15.6%. Although the data were all on the zero, but better than previous one in last December, minus 10.6%, minus 12.7%, minus 12.9%, and minus 27.7%. So the housing market was stable by the stimulus of a bunch of policies. To summarize, the way to the economy recovery was more solid than before, and which caused bond yields to increase significantly on Monday. The fundamentals now were still in the stocks market side. For funding condition, the last week was tax period, so the PBOC took care of liquidity by putting a lot of money into the interbank market. Owing to the paying tax through banks and enterprises, the liquidity was a little tight in the first few days of last week. The financing price was around 2%, but it's becoming loose since last Thursday. And the financing price went down to 1.8%. The funding condition was expected, neither surprise nor disappointment, and the PBOC tightened the liquidity again by withdrawing money from the interbank market. As for bond investment strategies, the yields of various maturity bonds increased a lot on Monday. Both long-term SEN and short-term SEN have hit the new peak values since the very beginning of 2025 and reached the level of last September or October. But the increasing trend has reversed since Tuesday, with bond yields decreasing around 5 basis points and showing some solid signs. The extent of bond yields increasing was big, but there wasn't a clear sign of losing funding condition from the PBOC. The total optimistic macro vibe brought by AI trend hasn't faded for now, so it is hard to say that now we are at a good point to buy bonds. Maybe we are still at a fluctuated space of bond yields. I suggest that we wait until the PBOC shows some actions for losing funding condition or the fading happens to the AI enthusiasm. Remember, patience is a vital element nowadays. So as always, if you want to know more useful financing information about the Chinese bond market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.